All right. Hi, everyone. It gives me great pleasure to welcome you to the Vision Team, the myEcon Vision Team Monday night training call. Before we get into our training, we always like to introduce our income shifting strategy to those of you who are listeners, who are new, for those who are even in the business, who every time they hear it, they get another understanding about how powerful income shifting strategies are for them. So I want to introduce you to our one of our top leaders in our company is Mr. Joseph McKee, all the way from Mississippi. I'm going to give this over to him, and he is going to share with us the power of income shifting. All right, Mr. McKee, you have it.
All right. Good evening, everyone. Thank you all for being here with us tonight. Again, as Ms. Pace said, we are on the call to talk to you a little bit about myEcon, which is short for My Economy, and it's the personal financial success company. But before we get into the income shifting strategy, I want to tell you a little bit about the company. It's 13 years old, debt-free, technology-driven, based out of Atlanta, Georgia. And here's the kicker. In its 13-year existence, the company has helped the company has helped its associates cash flow over $400 million back into their pockets for the purpose of eliminating debt and improving their lifestyles or investing, all right? So again, myEcon is the personal financial success company. So if you ask 10, 20, or 100 people what personal financial success is, you'll probably get 10, 20, or 100 different answers. So to make sure that we're all on the same page, we're going to give you this as the definition of personal financial success. It's simply having enough cash flow to support us during our lifestyles. Which lifestyles are those? Those are the ones we have during our working years and the ones we have during retirement years. And so let's think about that for a second. Having cash flow for our working years. During the time where we exchange labor and time for some money to take care of our mortgages or our rent, to take care of those car notes, to take care of the student loan debts, to take care of the things that our kids need, or just to have some things in our lives. But now here's one thing that we know for sure. Three things is going to happen. One, you're either going to decide to stop working. Two, you're going to be too old to work. Or three, you're going to get fired. All right. So we need money to support us during those times, during our retirement years. So that money is usually generated from an income producing asset that is generally funded from the same pot of money that we're using to support us for our working years. So the problem with that is this: most people don't have enough cash flow that they're earning from their jobs that will allow them to take care of their current lifestyle and simultaneously prepare for retirement. Now, here's the thing about that. We need more cash flow, and myEcon teaches its associates how to get more cash flow. But having more cash flow is not the answer. I mean, not simply the answer. You also need strategy. But before we get into the strategy, we need to discuss the things that stand in our way of attaining financial success. So we got a few obstacles. Obstacle number one is inflation. Now, for most of us, the number one thing that happens to us on a daily basis is we have to put gas in our vehicles to get us to and from work. And if we've been paying attention, the price of gas has been going up over the last few weeks. In my area in particular, from $2.15, now it's $2.50 a gallon. So just imagine budgeting about $50 a week for your gas. And now because the price is going up, guess what? Your budget is now gone. So the price is going up, not only with gas, but everything else around us, but our incomes are staying flat or staying linear, okay? So that's obstacle number one. Obstacle number two, which is probably the largest debt we will all incur in our lifetime, is taxes, all right? So we all have taxes that are taken away from our paychecks before we even get a chance to spend that money, all right? So not only are we paying taxes on the labor that we're performing, but we're also paying taxes on the property that we own. We're paying taxes on the food that we purchase, on the gas that we put in our cars, on the things that we do for our leisure time. So we're taking about a third of our income away is gone towards taxes. Now, we've got inflation, which is obstacle number one, and we've got high taxes, which is obstacle number two. Those two things together combine and lead us to obstacle number 3, which is debt. If money is being taken away from us due to inflation and the cost of living is increasing, and then we're also losing a third of our income in the form of taxes, this is going to put us in a position where we don't have enough cash flow to support us during our working years. All right, so that mortgage that we have, because we don't have $150,000 or $200,000 to purchase our homes outright, we have to go to the bank and we have to secure a loan to get that home. Because we don't have $30,000 or $40,000 to purchase that new vehicle that we need, we have to go to the bank to finance the purchasing of that new vehicle. And sometimes we need other things to get us through our daily lives. And so because we don't have the cash flow, we use credit cards or we get other types of loans or credit extended to us. And this puts us further and further in debt. Not to mention, a lot of us have gone to college or we have kids that are going to college. And because we don't have the cash flow to pay for their education outright, we have to secure student loans. So this leads us to having an enormous amount of debt. And that puts us in a position where we're unable to obtain financial success. Now, we've got 3 obstacles in front of us: inflation, high taxes, and debt. This leads us to obstacle number 4, inadequate saving and investing. If the cost of living is increasing around you and you're losing money to inflation, and then you're losing a third of your money to the taxes before you even get a chance to spend it, and you're also paying taxes on things you need every day, and then you're in a position where you're losing money because you're having to pay interest on the money you borrow to purchase your home, to purchase your vehicle, and satisfy some of the other things you need every day. You have to ask yourself, when will you ever have the cash flow to be able to save or invest? So because of the first 3 obstacles, we're in a position where we're unable to save and invest for our retirement years. Now, the number 1 strategy that most people use to try and combat these 4 obstacles is to A, go and find another job that's going to pay them a higher wage, or B, go back to college and pursue a higher degree with the hopes of securing a job that's going to pay them a higher wage. So you have to ask yourself this question: would a job with more income or a degree with the potential for more income really do anything to combat inflation? Would it do anything to put you in, to combat the taxes that you're paying? Would it do anything to combat debt? If you have to go back to school, more than likely it's going to add to your debt. And then if that's the case, you'll still be in a position where you won't be able to save or invest. All right. So fortunately with myEcon teaches its associates to generate 5 new cash flow streams. Remember on the front end, I said over the past 13 years, the company has helped associates put $400 million worth of cash flow back in their pockets for eliminating debt, investing, or improving their lifestyles. This is how they did it through these 5 cash flow streams. Cash flow stream number 1 is correcting your tax withholding. Not manipulating, but simply correcting the tax withholding. Number 2, minimizing your taxes. Number 3, generating some business income. Number 4, debt elimination. And number 5, investing to build passive income. Let's look at each cash flow stream individually. Cash flow stream number 1, correcting your tax withholding. It is a proven fact that employees have too much money withheld from their paycheck for taxes. How do we know? In 2016, the IRS said some 83% of all of the tax returns filed resulted in a tax refund, which means that individuals overpaid the amount of taxes that they needed to during the previous year, to the tune of anywhere from $2,500 to $3,000 overpayment. Now, I know for some people you may say, well, I get that money back in the form of a refund a year later. But what you don't get back is that return on the investment. See, when you overpay in taxes, you're actually giving that money to the government interest-free and allowing the government the opportunity to invest that money and make money off your money. And then within a year's time, they decide if they're going to give you some or all of your money back. All right. But what you miss out on is the return on the investment that you could have gotten if you had that money back in your pocket. You could have eliminated some debt, or you could have invested yourself. So myEcon teaches the associates how to maximize the take-home pay and use that maximized take-home pay for the purpose of investing, eliminating debt, or simply improving your lifestyle. So that's cash flow stream number one, correcting your tax withholding. Now, cash flow stream number two is all about minimizing your taxes. In America, there are two different tax systems, one for the haves and one for the have-nots. And we're talking about the haves. We're talking about those that have investments, those that have businesses. See, when you have businesses and when you have investments, you're placed in a position where you're able to use some of your everyday or every month expenses and convert them into deductions for the purpose of minimizing your tax liability. Now, where are these deductions going to come from? Think about this. Most people have a vehicle that they drive to and from work, or they just drive around for leisure activities and things of that nature. Where for the purpose of operating a business, people are going to spend anywhere from $6,000 to $8,000 a year on their vehicle, maintenance, gasoline, things of that nature. Where myEcon teaches his associates how to shift that money through a home business, and now you're minimizing your tax liability. That is income shifting. That's one of the expenses that you're paying on a monthly basis or daily basis. Here's another expense that you're already paying, communications. If you're on the call tonight, whether it be via your phone, your tablet, or a laptop at home, you're using the internet, guess what? You're using some type of communication. You're using the internet or you're using your cell phone. And it's a proven fact that people spend anywhere from $1,000 to $1,500 a year on their communications. So again, myEcon teaches the associates through his home-based business model how to shift that $1,000 to $1,500 through his business for the purpose of minimizing the tax liability. Now, it's also proven that people are going to travel. We're coming up on the summer months. People are going to vacation. We vacation during spring break, other times throughout the year. So we're going to spend money on airfare, bus fare, money on our cars. We're going to spend money on hotels, things of that nature. myEcon teaches associates how to shift their travel dollars back through a home business, and now you're able to use those expenses that you are already paying for travel, and now use those as tax deductions for yourself. And then those that have children, myEcon teaches the associates how to not simply give an allowance, but to convert that allowance into a wage for your children to the tune of $12,000 a year. So think about those extracurricular activities that you're already spending money on. We simply teach you how to shift that money through a home-based business, and now that money that you were paying on dance, basketball, any other extracurricular activity is now used to minimize your tax liability. That is income stream number two. Now, income stream number three is generating business. We're not simply just about generating tax deductions. We also want to generate some business income. So myEcon provides associates with a world-class business system that includes the income shifting membership, the income shifting strategy that we just discussed a few slides ago, a Cashflow Manager software that allows you to keep up with all your records or budgets for your home. We also provide you with identity theft protection. You also have free and discounted legal services, as well as a smart money credit system that will not only allow you to repair, rebuild, or maintain your credit, but it will also allow you to acquire a sound credit education. And finally, you will also receive some discount travel and corporate perks, not to mention additional discount products and services. All right. So how do we generate this business income? Well, most people, when we're talking about starting a business, don't know what type of business they want to start. They don't know the products, and they don't know pricing points. Fortunately, with myEcon, we provide you with a powerful retail strategy with a business in a box, sort of say. That provides you with discount products and services, like the ID Defender that is included in the income shifting membership. You're also afforded the opportunity to market to the public the smart money credit system, the Cashflow Manager app. People can also book travel through your portal. You don't have to be a travel agent, but they can book travel through you, and you can earn income. You also have some health and nutrition products, and not to mention the cashback mall, because we know a lot of people are moving towards online shopping. So we provide a platform where you can not only shop online, but you can save money and earn some dollars by doing what you're already going to do, which is shop online. And we provide this through a website that is customized just for you. In addition to our discount products and services, we also provide you with a way to earn commissions by referring individuals to our income shifting membership. All right, so if you look at this graphic here, you will see that this is a network marketing model that we provide to you, and we call it 3 is the key. Why is 3 is the key? Why is 3 the key? Here you go. When you sign or enroll with myEcon, you come in as a marketing director, and upon your first 2 enrollments, you earn $10 upfront commission the following week. And now what we teach you is to refer a 3rd additional member, which will then give you an upfront commission of $35. But we also like for you to get 3 people at the $35 rate for the purpose of opening up 3 different base shops. And what happens is this: when you open your base shop, you're able to generate income over and over, and we call this leverage income. Now, as you see the graphic here, this is for illustration purposes. This is no guarantee of what you will earn. This is simply what you could potentially earn based on the time and effort that you put in. But if you look, for every 3 that you have, your first 3 in your base shop, you will earn $105. Then the next 3, you get $150. On down to 12, 24, and if you see 768, you end up with total base shop earnings of $38,355. Again, this is no guarantee, but this is an illustration. Now, this simply happens if it occurs in a cycle of 9 times. So this could be 9 days, 9 weeks, 9 months, or 9 years. But you see the potential by simply using our income shifting strategies and then simply referring a few people. Now, there's more to generating some business income. In addition to upfront commission, we also provide you with an opportunity to generate some residual income. So as long as those income shifting memberships are active, then the company will pay you residual income on a monthly basis. So you can see this chart. For 10 active income shifting membership, you'll get a $30 monthly residual income. If you have 100 active income shifting memberships, you got $500 of residual income. On down to 10,000, where you got $80,000 worth of residual income. Again, illustration purposes, not a guarantee of income, but what could potentially be based on your time, energy, and effort. All right, so now we move on to the 4th income stream, which is debt elimination. Now remember, income stream number 1 is about correcting your tax withholding. And when you correct your tax withholding, simply what you're doing is correcting the W-4 form that you fill out when you first start working. Based on this form, this tells the employer how much tax to withhold from your paycheck. Now, combine this with income stream number 2 of minimizing your taxes. We teach you how to use those expenses for adjustments to your income, and now you're able to shift $200 to $500 back into your paycheck. All right, and to combine that with the generation of business income, now we're in a position. Let's say we combine those together, you get $1,000 worth of additional cash flow. With myEcon, we teach you to use that additional income and put it towards eliminating your debt. So let's look at this example. We've got 3 debts that we've got out there. We've got a car, we got a credit card, and we've got a mortgage. Our car note is $17,000. We got 32 months left to pay, and we're currently sending them $545. Now we add that $1,000 worth of additional cash flow. We send them a new payment of $1,545, and we're able to eliminate the car note in 12 months, which frees up $1,545 worth of additional cash flow that we now roll down to our Visa card, and we attack this $8,000 balance that we have. We got 78 months left to pay on it. We've got a $200 current payment, but now with the $1,545, we send them $1,745, and we're able to eliminate the credit card payment in 5 months, freeing up an additional $1,745 that we roll down to our mortgage. And now we got $200,000 with 360 months left to pay. We're sending a current payment of $1,200, but when we add the $1,745, we're now sending them $2,945. We're able to eliminate our mortgage in 68 months, freeing up $2,945. So we got new cash flow in our home. Let's look at the total debt eliminated, $225,000. And because we use this additional cash flow and we use this snowball effect to eliminate the debt quicker, we were able to save $352,000. And by saving $352,000, we were now able to have $2,945 per month, either to invest or simply to improve our lifestyle. So that's cash flow stream number 4. This leads us to our 5th and final cash flow stream, investing to build passive income. Now that we've got $2,945 a month in cash flow, what do we do with it? Well, myEcon is all about helping you build generational wealth. So we're going to teach you to take that $2,000 a month, which is about $35,340 rate of return. You now have $538,000 worth of cash flow. If you leave it in for an additional 5 years, you now have $1,019,000 worth of cash flow by simply shifting your money from correcting your tax withholding, minimizing your taxes, generating some business income, eliminating that debt, and then taking that cash flow and using it to invest and build passive income. That is what we call income shifting. Now, you can sign up with us today. If you like what you've heard, you sign up today and you will receive the personalized website that includes our world-class business system and our income shifting membership, where you'll be able to learn and implement the income shifting strategy. You'll get the cash flow management software that will allow you to keep up with the records and everything that you need because you're now operating in a home-based business. You'll get identity theft protection to the tune of $1 million. You'll also get free and discount legal services, not to mention the smart money credit system if you need to repair, rebuild, or maintain your good credit. You also get access to discount and corporate perks, not to mention the valuable tax benefits that's associated with myEcon and its home-based business model. And you get all of this not for the value price of $199.95, but because myEcon has a summer sizzle promotion, you're now able to get all of this for $19.95 to start, with a $34.95 monthly investment to continue 30 days after you begin with us. That is our income shifting membership. That is the overview of our income shifting system with myEcon. Thank you. Hopefully you all enjoyed it. If somebody invited you on a call tonight, make sure you get back with that individual and let them know that you're ready to get started with myEcon and start income shifting and realizing your personal financial success.
I'm gonna get it. Don't seem to be as easy as before. Thank you, Joseph, for that presentation. If we have any guests on the line, as he has said, go right ahead on and make sure that you contact us so we can get started. But we do welcome you to stay on the line so that you will be able to hear more of what we offer and get a feel of what our training is about. Joseph, I'm wondering, do you have to send me an invitation to take it back?
I don't think so.
Don't think so. Well, that's not cool. Yeah.
I don't see where I have to.
Okay, great job, Joe. I know I was on late. Okay, Lamar Hicks said great job. All right, let's see here. We are going to get on here in just a minute, you guys. More. Let's see. No, that's not it. Okay, it's coming up in a way in which I'm not sure if I have control. No, I do not have control yet. Not sure why this panel is over here and it doesn't give me that option. Okay. You guys bear with us. We are going to reclaim the host. I finally found it. All right. I think I am here. All right, you guys. I'm going to take a moment to move everyone over who is and promote you to a panelist so you can get a chance to see Yes, good job. I think I see Miss Lambert, Lamar, Monica, Natha. Wonderful. Okay, you guys, I'm grabbing you on. And we have 5 callers. I'm not sure if you used the ID and got an opportunity to actually speak. If you are a caller, you probably should use our, let's see, Joseph, you were awesome as always. All right, wonderful. That was from Miss Lambert giving you a shout out. Okay, you guys, I think we are here tonight. I have everybody here and we are ready to start our training. A little bit before we start our training, I always like to see a testimony, somewhat as to where you have been going, what you have learned in the last weeks, because you know what? It doesn't do any good to continuously train you if there's no application. That's where the real power is located, in the application. So we started this training over and we started at the bare basics of budgeting and managing our money so that we could move to where we are today. And I'm telling you, this train is moving. I'm so excited today. I said, I'm not going to shift. I'm not going to change, because I'm getting ready to put together a presentation to teach you guys, if you have never known how to buy your stocks and what stock certificates and things of that nature is about. I'm getting ready to do that, but we've got to do our first works first, okay? And that's what I'm trying to get you to do. So those of you who don't mind, with the training that we've had from the basics of budgeting to now, when we brought our guest on last week to share with us her wisdom on tax deductions, our 7 common tax deductions. See if we can get an update from you. How have you been doing? What have you learned, or at least one thing that you've implemented that you're trying to apply these principles that you have learned? And I guess I'll take you all off. I'll unmute you so that you can speak. Okay. All right. Who do we have that don't mind sharing? Real quick now, real quick. Yes, go ahead.
Well, I'll say this, Ms. Pace, and he's on right now. Cortavius and we've decided, and we've definitely decided to meet with each other at least once a week, and start to implement some of those things that we talked about, especially as it comes down to budgeting and things of that nature. So we schedule time to meet with each other, and we'll go through our paychecks and look at where some of that money is coming, is leaving our homes, and see if we can eliminate a few of those things. And then we'll go through, especially after tonight with the Cashflow Manager training, we'll go through and we'll set those things up so we can actually start to implement those things on a day-to-day basis.
That's good. That's awesome. That is wonderful. Now that's getting serious with your money. Okay. All right. Anyone else?
Yes, ma'am.
Go right ahead.
Okay. Yes, I am trying to eat. I have 2 credit cards that has a balance. And what got me when I got ready to make the payment, I noticed the interest rate on one has really jumped. Like, out of the payment that I made last month, maybe I'm gonna say out of $150, $56 was interest. And I'm saying, wow. So I calculated, and if that was the case with each month, I calculated how much that would be. Then I looked at the other card, and it was pretty much the same. And the notation was that the interest rate has increased, ... Although I have a good credit score, what I call 7+, that still was all that money if I let it continue over the course of a year, how much money I was losing. So what I did do is I applied for a card that has 0 had his promotion for 24 months, 0% interest. Transfer both of those balance over to that, clear that up so that I can go on and eliminate that debt.
Wonderful. Yes. Outstanding. Outstanding. Okay, wonderful. Now that's income shifting at its best. Wonderful. All right, who else?
Well, the one thing that I have done is that I've decided to do a sheet for the month and look at you know, right now I'm using, Uber. So I keep track of, how many times, I've taken the Uber, during the course of the week. And then it grows on to to the course of the month. And, how much I spend, on fast food, how much I spend on miscellaneous, and just put it, in a column, by itself. And, at the end of the month, you calculate, how much you spent on the Uber, how much you have spent on fast food. And, once you look at that, you kind of step back and say, man, maybe I need to cut back, on fast food or, maybe I need to put, money here instead of there. And so, once you do the math, you kind of see, what you need to cut back on. And I think that's a pretty good indicator of where you need to put your money toward and what you don't need to put, what you need to subtract from, from your spending. And I know probably everybody on here, we probably spend a lot of money on fast food. So, once you look at the end of the month, you say, man, maybe I need to cut back, on this, and maybe I need to go to the grocery store and buy meat and bread, to take to work, for lunch,
Right.
stuff like that. So it would make a big difference if we all, somewhat did that, and just look at the end of the month, the money that we have spent.
Good. Wonderful. That's wonderful. That's applying the principles. That's income shifting. That's income shifting. As Joseph said in his presentation, we were not just about you saving on taxes, because income shifting is the entire program of eliminating your debt and managing your money and making investments. Okay. All right. I got room for one more. One more. Anything that just burning, and I'll unmute you. Somebody had gotten loud, so I had to mute some of you out. But I'll unmute if you want to be and you want to speak. Okay? Anyone else? Well, I'm going to say this. I think that I saw Michelle Lucas, who never really tells us her story, but when our guest stated last week that you have a backup by going to your social media and advertising, I saw the very next day Michelle Lucas, who had not been advertising her business, start to advertise her business online. And so that's backing up your documentation that you are actually working and getting your business out there. And so kudos to you, Michelle, because I actually saw that you did that, okay?
Thank you.
I know you weren't going to say anything. Okay, and then some of you are doing well by introducing to others. I know that we're about to get some new members, and I have some new ones to bring on board. Just hadn't had I had to recover. I'm not fully recovered from tax season, but I'm getting there. I'm getting there. So with that being said, let's move on then. I'm going to check my list to see if there's anybody else to move over. We've got some callers that are still on the line. Thank you for joining us on tonight. Hang in there, and we are getting ready to train, okay? Now, you may need to get some pencil and paper for what I'm about to do, because I don't want you to be so lazy, and some of you will, I'm going to mute everybody out. Okay. Okay, here we go. Before we go and log into our Cashflow Manager to show you actually how to enter your deductions and how to, your budgeting system is there. Lamar spoke to that. And we actually have a jewel in myEcon because we've got all the tools to manage our personal financial lives, okay? So I want to give you some tips first. These are some things that you should know when it comes to record keeping. And I'm going to, if somebody want to post them on GroupMe as I go, you want to write these down so that you can remember these. But I'm going to start with some important points to record keeping, okay? Record keeping proves that you are a serious business owner. Some of the situation that I incur, if that's the right word, or that I run up on with myEconers, and this is a myEcon Incorporated call, training call, right? So I'm talking to all myEconers. Of those myEconers who are really don't prove to me that they're serious about their business. And here's what I say that's proof. And I'm saying this from a perspective of a tax professional, okay? What it says to me, if I'm your leader and I'm in the seat of the professional tax preparer, and I can see that you're not really serious about your myEcon business, okay? We're gonna say that some of you do something else, okay? So that doesn't apply. But we've got some people who only do or only have a myEcon income shifting membership. And so what's important, record keeping is so important, but what you got to know is you cannot keep records. I know my husband's not getting ice while I am training, you guys. I'm sorry, we're gonna take station break so he can get his ice. Okay, all right, so I apologize. But what you gotta understand is your business deductions are about the work that you do and how you will accumulate expenses along the way. If you are not doing work, then you can't keep any records. People will try to say, but I pay my $34.95 a month. That does not constitute you initiating your business with the intent to make a profit. Let's get that straight up front, because I've heard about other groups in other states. They don't have leaders who are tax preparers, and they've got people who are glorifying this and just passing along the wrong information. But any myEconer from anywhere that hears this, this is the truth all day, every day. You must work your business for your deductions to be allowable. So record keeping will prove that you are serious about your business. If you have anything else that you have going on that makes you eligible for deductions, how about you need to become more serious because you need to actually work your business with the intent to make a profit in order to be eligible for those deductions. Listen, here's a warning comes before destruction. I think there are several times I've shared with you that IRS is cracking down, is going to come for the small business owner. You know that corporate world twist up records and stuff for the longest. However, the reason they come for small business owners because they are like some of you. They are not truly working. They're not business minded. They have not made that transformation. They are trying to shift their income by actually getting over, if that's the true term, or tax evasion. And you can't do it well if you're a small business. If you haven't produced $10 or at least $100 or $500 a year, you are not working your business with intent to make a profit. I'm telling you, you got so many years that you can not show income. But now there's nothing written. If you will go, there's nothing on the internet written that you have to not have a loss. But if you really start working your business, you're not going to have a loss, and you still can save on taxes by taking care of your records. The second point is record keeping proves that you care about your money. Okay, you care about your money. We talked about in earlier training how you have to gain a relationship with your money. I did not say have a lust for it. I did not say have a love for it, but I said gain a respect for the money and respect yourself because you work hard for it. So surely you want to do what's necessary to take care of it, okay? Record keeping is a part of taking care of your hard-earned dollars. Okay. The number 3, record keepers understand that the burden of proof is always on them. Okay. Okay. Here's what I get at times. I get at times people saying, "Well, Miss Pace, I just didn't have time. Miss Pace, I just didn't know. I couldn't come to the meeting. I couldn't get online on Monday night. I couldn't." And by now Miss Pace is smiling, but I will admit I've had an attitude out of that because I'm thinking that is such an excuse because we do what we want to do. If you understand that the burden of proof is on you, then with that understanding, you're going to keep your records and you're going to learn what your available deductions are and how to list them in your cash flow manager. Now, that's just my opinion. Don't hold it against me. Now, number 4, you should be journaling your business deductions at least within 24 hours. How many of you have forgotten where you've gone? You've forgotten the miles that you went. You've forgotten the food that you ate. You've forgotten the things that you've done that were eligible because instead of stopping within the 24 hours and recording your deductions, you have actually carried on. And then you're like, wow, you file your taxes and you realize I had so many more deductions that I could have used on my taxes that I did not use, okay? Or you remember a meeting or something you hosted. And so not only does IRS require that you record your records within 24 hours, but just thinking naturally, we lose our mind within a year. It's hard to remember. And there are times when we can recreate deductions, but this is not the top for that. And that's if you lose those deductions that you want to try and recreate them anyway, okay? Then number 5, notating your deductions is important to the relationship between your expenses and your business. Let me say that again. Notating your deductions is important to the relationship between your expenses and business. Now, I'm going to give you some examples that I have had from some myEcon. We're going to get real, okay? That's the only way. I'm not trying to hurt you. I'm trying to help you, and that's the only way I can correct you is to say that it is totally unacceptable to go buy a pair of jeans for your daughter, your son, your niece, or your nephew, put it in wages that you bought a pair of jeans at Old Navy for $10 or $15, and you're writing that off. It's totally unacceptable, people, okay? Then, what about meals? I've seen people put in meals and entertainment, and then their notation for that meal is, was taking the family out. Look at my face. I'm going, okay, that's going to be disallowed. That is totally unacceptable. Then there have been some notations about meals and entertainment, and constantly talked about the cash flow manager. Talked about, who did you talk to? Who did you talk to? Okay, someone even brought their cash flow manager to me one time, and they said it had on there that took my cousin Lily out to dinner to discuss myEcon. Took my cousin Lily. I love all my cousins, but you guys, we're not cousins when it comes to business. We're business partners. Okay, so Y'all call me cuz all day long. I ain't calling you that on the internet. That's not necessary. Totally unacceptable. So the way you notate your expenses has a relationship, if you guys understand what I'm saying, with your business. Okay, it has to be relatable or it will be disallowed. Okay, now let's look at things you do not want to do. Okay, you don't want to wait until tax season to regurgitate deductions. I've been guilty, so I ain't mad at y'all. But when you learn better, you do better and you teach better. And I'm teaching from precept and example. Okay, so you do not want to wait until you have actually gotten in the tax season, and now you are trying to enter your receipts and think about where you were and what you're doing. I promise this is when business ownership becomes a problem. This is when people defect. This is when people give up. This is when some people have even said, myEcon ain't nothing, so I'm quitting. Okay. Number two, you don't want to wait until tax season to make up deductions. I think I said those two in one. Regurgitate and make up. Let me tell you why I put it differently. Regurgitate means that you probably have some legal deductions, okay? And you're trying to think about where they came from. Making them up means you're about to try to fraud. So you want to try to make up some stuff you see in a book. Okay, one of the situations I had was in our books, we give you the 475 tax deduction book, and it will show you where you can write off bank fees. So you get an opportunity to write off bad checks. Let me help you understand. You cannot write off your bad checks. If you are doing business, for example, if Honeydew is buying some Data Ultimate for me, and she wrote me a check, and that check bounced, and I was charged a fee for it, then that's what is written off. If you don't have control of your finances and you are trying to write off your fees because the lack of control of your finances and your budgeting, that is not a write-off, okay? It's not a write-off. And anyhow, if you don't have anything producing and showing, my goodness, you know. And so don't try to argue with your tax professional. But see, the book said, that is not what the book said. It's not what the book said. Okay? Go back and reread the book. But the biggest thing is become a serious business owner. Stop being pitiful in your marketing and stop being inconsistent. And your business will get noted. Do everything that we're training you to do. And you will grow to that point where you can write that stuff off. Okay? And it makes sense to write it off. The next thing is missing important training opportunities. You don't want to do this. You don't want to miss important training opportunities to learn how to keep records and your deductions. Okay? You also have the option of going in your back office and watching videos. So there is no excuse because, and I don't recommend that my people go on everybody's line. I'm gonna tell you, I've got some myEconers that are hustlers and big fast talkers, and I'm not with them, and I wouldn't put you with them. I'm sorry, I'm a woman of integrity. Tell the truth, okay? And they get me on that. But you gotta get to the point to where you find a way to get your training in so that you can do better. And listen, if you have team members, oh my goodness, they're active team members, and you are not sharing. Guys, you don't want to be selfish with this because they enrolled under you expecting you to share something with them, right? So you want to do this so you can share that with them. If you're not going to expose them to the whole team, then be a good leader, do the work, and teach them to do the same thing. So you have access all over the place to help yourself out. Okay, and to help the people who have trusted you and who have enrolled. The next thing is, if you get a letter from the federal or from the state to be audited. What you do not do is try to call them and start talking to them. Okay, I've had some people that's been pretty lucky because they called beforehand, but they really were serious business owners too, doing things. But some of the rest of you, I am no fun. It's not any fun, is it, Nathan? That's not. And so their job, what you need to understand, that they will talk to you, but their job is to disallow every part of your business and call it a hobby. I don't know why y'all ain't got that yet. They're not your friends. So picking up the phone and calling them and they start asking you questions, if you're gonna call them, you got to know how to answer that. I'm gonna wait and do another training. You guys have already I've already done it though. You could go to my YouTube and find it. How you're gonna speak to them, what they're looking for, your business plan, your hours of operation and so forth. And you gotta be able to know how to answer them, okay? Now, the next thing is, I just wanna give you this last couple of tips is business owners have a work schedule. I put out for my clients, and some of them, of course, are my e-commerce, okay? And so for my clients, I put them out and I put a due diligence form. And I've had some that are not on this team, you guys, and I'm inviting them to join the team to learn what they're trying to do. And just as good, when the question is asked, do you have a business? Yes, they put myEcon. And then the question says, what are your hours of operation? And they said, I don't have any. I just do it as it comes. Or none, or I work my job for absolutely unacceptable. Now, because you guys got lucky and know me and have come to me, I kind of re-instructed you to change that, but don't nobody do that no more. As a business owner, we have taught you several times that you should have a schedule of operation. I know what my schedule is for my lifestyle. This stuff has to be included in your lifestyle. It cannot be an afterthought, because here's the problem. You're going to lack personal financial success. You're going to lack personal business success. This is going to make you crazy or make you drop out. So we want you to stay involved, but we know that you are an adult. So it's up to you to put it into your lifestyle. The final thing is, it's important to have your deductions categorized. We give you the 475 tax deduction booklet. It is great for categorizing. I'm going to show that to you when I go to the Cashflow Manager. Because from a tax professional's point of view, let me tell you what we have to do. And you guys, y'all need to go and look at your tax returns. You can go online and just put in 1040, 1040A, Schedule C. Take a look at the Schedule C. You're going to see categories there. What do you think your tax professional has to do? We have to fit your deductions in those categories. So I had a customer who's not in myEcon. She's in another network of business. How about that? Okay, so she's got stuff written down. What does this mean? Where does this go? How does this qualify? You understand what I'm saying? So we've got to put it in order. You've got to know where it qualifies and where you're going to fit it. And some of your deductions will fit in possibly 3 categories. But that book is alphabetical, and it defines, and it will actually give you a second reference to, it might be over in this category, and you can go over there and you can look, do your homework. Not going to teach that, because what we've been trying to get you to do is be accountable and purchase your material and use them. Okay? All right, I'm going to open the line for any questions as I go to the Cashflow Manager, and we're about done. I'm going to take you through the Cashflow Manager, and we're going to do some work, okay? I'm going to unmute you. Okay, do we have any questions or any comments so far? Okay, then all of you have an understanding. Great. Okay, so it said you cannot minimize Zoom when you are recording this meeting. Okay, so I'm not gonna minimize Zoom, but I gotta get to my, okay, gotta get to the right screen to share. Okay, do all of you see my myEcon website?
Yes. Yes.
Okay, great. All right, I think I got somebody. Okay, here we go. So we're gonna go to the myEcon website, and you know what I always do, people? I always try to start at the beginning so you would know how to navigate through your website. Now, you've got several ways that you can go to your cash flow manager, okay? I did that too soon. Let me go back. Sorry. Okay, you can go through your products. How about that? You can go to products and services, but I would rather not. You can go to log in. I'm gonna log in, okay? Okay, we're gonna log in to our back office. Now, you got several ways you can go. You can, unless they changed it yesterday, you can go through income shifting membership. See there, cash flow manager, or let's go back to BMC home. You can go to tools, bam, cash flow manager. Or check this out, if you don't want to go through your entire website, okay, you can go to my cash flow manager. Y'all see that up there? mycashflowmgr.net. Now, I have just, you don't have to go through all of that. Let me do this. Okay, I'm gonna take that cash flow manager out. I'm gonna just say mycashflowmgr.net. Okay, because you don't want to go through your entire website. How about push the login button and then go right here, put in your information. Okay. Voila, there you go. Okay, we're logging in. All right, so now there's also another way. How about downloading your cash flow manager on your phone? Okay, let's see here. Where's my cash flow manager? I got so many apps on here, just like this great business woman and stuff, and these apps. But these are good apps because they be money taking apps. Okay, I'm gonna go to the cash flow manager. You probably won't be able to see it on my where I go. My cash flow manager button, download it on the phone, and I know this is like okay, wham. So look how easy it is. We've covered all bases, which has given nobody an excuse. Ooh, I hate that because we like excuses, right? So now we're going to show you how to enter your deductions. Okay, we're gonna start with deductions. Ooh, I got too much stuff on mine. Create new cash flow manager. You have a choice of business or home. Before I go to business, I'm going to go ahead and go to home because some of you, when we're talking about budgeting, you think you had to go find your own way of doing it. You do not. This is why you want to keep your membership up. That was the other thing, is budgeting in $35 because you have this opportunity here, and it's, I don't know who, and you can write that off. Okay, so this is the one about your budgeting. I'm not going to give an example in here, but I am going to show you your drop sleeve to where you can see about your salary, okay, and enter your information there. Then you can turn around and go to the dashboard and you can enter your expenses. We have them right here. Most expenses that you will incur at home are listed here, and if they're not, you get a chance to make a customized expense tab and then save that entry, and voila, you got your budget going on, okay? So I'm gonna get out of here. I'm gonna go back to my Cashflow Manager, and now we're gonna go to make a business tab, okay? Now, this is the correct way to do this. I have a small dyslexic business partner on here, which is gonna get me because for years, I couldn't figure out what she was doing to this Cashflow Manager, but she manages to keep everything together meticulously. But I'm gonna show you the proper way that this software was intended to be used, okay? So we're gonna do Monday night training. Y'all, I was only joking about dyslexia. I don't wanna finish. So now we're gonna save it. All you have to do is name your business, okay? Name your business or put your name in there or put myEcon in there. If you have another business, we often get this question as to if I have something else, can I use it for that too? Yes, of course. You just need to have a separate tab for those deductions. Like for instance, Clarissa has paparazzi. That's not myEcon. So what she'll need to do is she'll need to have whatever she's going to do in myEcon that is an expense. She need to have one tab for that, and then for paparazzi, she needs to have another file for that activity, okay? They have to be separate. These are separate businesses, okay? Now, let's enter our income. Little green button here. These are your commissions, okay? We're assuming that everyone here is working for myEcon because this is a myEcon call. This is a myEcon group meeting, okay? Now, we made $1,000, okay? Who means actually, it's so complicated the way they put it, but it actually means where it came from. So who is myEcon? What is bonus payout? Okay, where we can put Savannah, GA. Okay, enrolled 10 summer Sizzler promotion. Okay, don't have to put a lot of words, but in my notation, a part of business. Okay, so you want to notate everything that's a part of your business. Now, if you had a file, I'm not going to go through it. Well, I'll push the button. You can take pictures by your phone. Guys, you can also scan in your receipts and get them off of your computer. How about it? So I click it and I get a chance to go into my files. And I may have some receipts somewhere in my, I have all of this business stuff I do, but I have myEcon and I've got business ads and so forth. And then I can upload it right here. I can upload my file in there, okay? Now, is this recurring? No, it's not. But we're going to put it like that for the sake of time. I want to combine things. So I'm going to say, yes, it's recurring. It's recurring monthly. So I'm going to go over here, and this is April 23rd. I'm going to go and over here, and now it's recurring on May 23rd. I'm going to save my entry. Okay. All right, somebody got some noise in the background. All right, so we saved it. So you see, I also saved a flyer in there because they want to see you doing your work. So when you go to an event and you have a program, an outline of myEcon, just say some of you got other things you're doing and you at a workshop or event, and they have take those with you. Then scan them and put them with your transaction to show that you were there, okay? So now we're gonna go up here at view and we're going to put categorize. Remember I told you categorizing is important. I cannot stand for one myEcon to come and give me a Cashflow Manager that they think I'm going to take categories out and calculate for them. It is here. So let's go to enter new expenses. You do not have to back all the way out, okay? Now, we're gonna go to our expenses. The advantage that you have is that myEcon has a drop sleeve of expenses. These are really some common expenses that will help you. If you do not understand, like for instance, I don't particularly like the other button. So if they left out a deduction category, why don't you go ahead and customize, and I'll go through that in a minute. But let's go to something that's very important to you, okay, is your Cashflow Manager monthly fee, okay? So we're gonna put $34.95, who, myEcon, what, web license, licensing fee. Aha, I can see it, okay. I don't know if they're in Savannah, it's Snellville is where they are. And here I'm gonna put automatic draft this website, okay? All right, now, for those of you who are not using myEcon as a business, but you are using the tools, I would not put business website there because you got to connect it as to why you got this big old website, okay? I'm just giving you guys a hint to try to help you out. I know what y'all think you're doing, okay? But you can't pass it off if you're not working myEcon. So if I were you, I would say record keeping software. Y'all got me? You can put record keeping software or income shifting software. You understand what I'm saying?
If you appreciate your job.
Okay. Okay, I'm muting you guys. Okay, so, all right. Now, we're gonna go down and just say, for instance, there's no car with this, and this is recurring, and so this is going to be on a monthly basis. How about we're gonna go to our date selector. We're gonna select the date, and then we're going to say the entry, okay? Now, let's enter another expense. Let's go to our, oh, your website also can be advertising. For those of you who are working myEcon, it's advertising. It's another category that it could go in, okay? Let's go to meals and entertainment. So you know, in they haven't updated this to just put meals, but you do know that in this year, you cannot write off entertainment, but you can write off your meals. Matter of notation. So, $120. Where was I? Red Lobster. Ooh, my favorite place. Okay, what? Dinner meeting. Okay, where? Hot Springs, Arkansas. Okay, so Lou Lambert, Latoya Yarbrough, Nathan Peel, training, no, I'm sorry, seminar, training, yep, training seminar or training meeting on record keeping, okay, and our business planning, okay. Now, if I were at home, I'm gonna put another one of those in. So this is the one that she talked about if you are at home, okay? All right, we already got our expenses coming up, categorized. Let's do another one. We're gonna do another meals and entertainment, okay? Because we can't entertain. So we can't just say, but we are going to have an economic day where we spend $156 on some food, right? Food, okay? So we're going to list out the people who were at the meeting, okay? And we can say myEcon prospects, associates, etc. Okay? What? Business presentation, okay? Or you can put what? financial education seminar. Okay, now we're going to put where? 524 Trotter Lane. Attending. Okay, because you got to get down. Okay, Lou Lambert. Da 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 da. 4 enrolled, sold 2 daily, ultimate, and 2 sprayology. Now, you got to get specific with this, okay, with meals, if you're going to write that off. You cannot, y'all can just throw it out the window if you're just going to go and eat and put receipts in because you went and ate, okay? And that's when it's going to be disallowed because you just went and ate, okay? That's what they're going to consider. So you got to turn it into, remember I told you, your notation has to be in relationship to you operating business, okay? And how you're doing that. Okay, let's get one more. Okay, communications. Okay, so we're gonna put in $160. Who? AT&T. What? Business cell phone. Where? Online. And then paid by check or automatic draft. Okay, something like that. Okay, and then save it. And you know if it's recurring, you're gonna put that in there. All right, you guys. Let's do wages, okay? Because I spanked you pretty good about those wages, right? So let's enter the wages then. Let's go to wages. All right. First of all, you got to keep in mind that you have set up your children or your grandchildren or a niece or nephew to work for you, and you've set them up. You've set it up properly where they have their contract agreements of what it is that they're going to do in business, correct? So since you have that set up properly, we're going to go in here, and y'all know I'm not changing dates. You know, to change a date, you can go over here and change the date, or you can turn around to your date selector and choose a date. Okay, this is very simple to work. Work at will. You type in, do not be afraid. So we're going to put in this child is getting paid, let's say, on a monthly basis. Well, let's put them on a weekly basis. Okay, we're going to be reasonable because this child is 7 years old. So I'm going to say, I'm going to say $25. Okay, who? And Michelle. Okay, what? Employee salary. Okay, where? Wherever she lives. Okay, and then we're gonna do see employee contract for services rendered. Okay, now because if you were audited, you're gonna send in your contract. They can see that. Now this is gonna happen on a weekly basis. So what we're gonna do is we're gonna go over here and we're gonna go to 30th, and then we're gonna save the entry. Okay. Now, if you were buying clothes, what I would do is, if I were you, I would make this some type of consistency, like your paycheck, once a month or something like that. You need a paper trail. You take that to a custodial account in your bank account, and you run in a paper trail. You can take it out and do with it what you need to do. You can put it, you see, this comes with budgeting, because if you budgeted what you were going to spend for your children, then you would take that out somehow. You would put it in the account, and then that would be your limit, and you just take it out and do what needs to be done with it, okay? That does not mean that you have to give those dollars to those children in their hands, okay? So, depending on how old they are, okay? Mine got old and they started begging a lot. Well, they were sad to hear me present and say that. They got all sad. Now, I'm going to show you the value we have, and then I'm going to minimize this, okay? You guys, I'm a little stuffy, so I hope I don't sound to myself like I'm in a box. Okay, so See how neat that is? We've got your commissions, you got your income, you've got a category here, a category there, a category here, and a category there. And if I had put in my mileage, which I'll go back, I forgot, I need to show y'all how mileage works. See, you got two separate things at the end of your Cashflow Manager in your spreadsheet. They're easy for you to use if you're going to do your own taxes, and they're easy to keep records in the event that you got audited, and they're easy for the tax professional, okay? If you notice, our guest last week said that she wrote the book for people who do their own stuff online. Yeah, that's because oftentimes they don't understand, and everybody's saying, this is so easy, I just do this myself. And I heard one young lady say, well, I just figured this is easy. All you gotta do is just put some numbers in. I was like, you better stay in myEcon and learn this, because you gotta know the rules and regulations, IRS codes and so forth, and how it works, okay? So we've already had people get in trouble. Now, let's go to, I'm gonna go here, and this is why I say you do not have to split this out in categories, because the categories are already there for you. So there's no need. This is what this was designed to do. We got a very favorable, organized person who puts all of her categories, who makes a file for each one of her categories. If you don't want to go through that trouble, just choose your category from here, okay? Now, let's do this. You got transportation mileage, okay? Whatever day that was, you can choose between 3 cars now. The new rule says 3 cars can be put in business with you. You have to have your odometer reading, okay? I don't care what nobody says. You have to have it, okay? Now, my business miles are 4 miles, okay? Now, you're supposed to split your miles between commuter miles, business miles, and personal miles to get your percentage. And all you have to do is save the entry, okay? Now, there's another way. You got a mileage log. Well, check this out. If you had to send in your proof, your mileage log is right here. Well, I didn't put notation on there, but just in case you didn't meet anybody, but you were traveling to the event, you know to note that, okay? I shouldn't have to tell you everything. By now, you should get it. Your notation should be in there, okay? I'm going to do another one because I want to explain to you this. There's a difference between your your travel miles and your in-town miles. Your in-town miles are your transportation mileage. That's the tab for those miles of doing business in town in one day. If you are out of town, okay, you're going to go to travel, right? So I'm just going to go to the other tab, but you could put I would recommend that you put in your expense type travel mileage. Okay, make that distinction. Okay, so this is going to let the tax preparer know where this is supposed to go, because there is a difference in the percentage of the miles that's taken during the day than those that are overnight. As a matter of fact, you have to write off between standard and actual expenses to your car. If you travel overnight, you get an opportunity to write off the gas and the mileage, okay? But if you're gonna write off the gas and the mileage, it needs to be in the category. I'm talking about for overnight, it needs to be in the travel category, okay? All right? And some people will say, well, what's the use of me taking actual expenses or mileage, or what's the use? Okay, but you got to understand what the publication says is, if you're new in business for your first year, they recommend you write your mileage out. I don't care if it's 1, because if you come back the next year, you might have more actual expenses to your car, and you'll be eligible to use that. Okay, and then the next year you may have more miles that will give you a greater deduction. So you want to be able to do either or. Doing miles the first time makes you eligible to do either or any year that you're filing in that business for that particular business. If you shut it down and start another business, it starts over. Okay? Y'all got me? It starts over. So you want to do that. and then we're going to enter our information as we did before, our mileage, 125. Yeah, I got more mileage than that. And then we're going to save it. Now, the rule says there's a 90-day rule that if you're consistently keeping up with your miles for 90 days, I'm not saying 3 months, 90 days, then you will get a chance to average those miles if you do business all year long. So I think our visitor, our guest last week talked about going to the change of oil and this kind of thing at the end of the year, the beginning of the year. I generally recommend that you guys write down at the beginning of the year your mileage at January 1 before you move that car, and then write down your mileage at December 31st, because you'll get a chance to average out how many total miles that you have on that vehicle, and then you can average out how many miles that you actually have had for business. Okay. All right. Now I'm going to unmute the line. I think that is, well, let me show you guys one more thing, because some people say, well, I don't know how to print it. Okay. You're not computer savvy, but let me show you something. You go to on my computer, I go to my 3 little buttons up here. I push print. Okay. Now, what if you want to save this? Now, I like to put it in landscape because it saves more paper. But if you want to save it, see, I could choose my computer and print it. But you can go over here to change, go to save as, go to save, and save this, okay, for the season. This is a backup for you. Saving these files is so necessary, all right? Let me show you that as well. Okay, you see where it says printable view? Look at there. Now, you get a chance to save this as an Excel spreadsheet. So I don't just trust servers. They could go down. One time, myEcon went down when we changed this whole scope of our website. It went down. Thank God we were able to get our records back. But you could lose server. You could quit the business. At least you would have your records. Look at this neat thing that's here. You got profit and loss. Some of you will buy a home. Some of you are just in business and all you have is business income, and you're going to buy a car. They're going to ask for your profit and loss statement. I would not bring this up if I was not making a whole lot of money or anything like that in my business. But if you're the one that's really making good money, guess what? You get an opportunity to have, I'm going to click on this, a profit and loss sheet. So myEcon has covered all of your bases with this little tool, and I would use it if I were you. Okay. I think I lost some people. Okay. All right. I am going to unmute all and take some questions. Now, if you got noise in your background, just use common sense and mute yourself back out. Okay. But does anyone have any questions? We got about 2 minutes or so left. Any questions?
Hello, Clarissa. It's Nathan. Can you hear me?
Yes, ma'am. I can hear you.
Okay. You had mentioned that if you're doing out-of-town travel, to go under the other tabs, and you can use mileage and gas.
Yes, ma'am. You sure can.
Okay. Now, so like with me, I pretty much go out of town every day to work.
Let me say this.
Is there a distance or something like that? Okay.
Let me clear it up. That's overnight trips. That's if you go spending the night. I'm sorry, you guys. Let me clear that up. That's overnight. If you're going to be there overnight, then you can use the mileage and the gas.
Okay. And I am sometimes, so that clarifies that.
Absolutely. And that's when you write off your hotels and your meeting meals and your expenses, your cleaning, your dry cleaning, your business suits, and that kind of stuff.
Okay. Okay, thanks.
Okay. I love questions, you guys. There's not a dumb question at all. So ask it. Okay. Anybody else?
Well, if there's no more questions, I'll make this statement.
Okay.
You do not want to have to regurgitate ever.
Yes,
It is no fun.
oh, tell me about it. Tell me about it. Not at all, especially when you get that letter and you hadn't done it. All right. Anybody have any comments then?
You do an outstanding job as always.
All right. Thank you. Thank you very much. So I hope you guys are empowered enough to take this out to your teams and spend some time together. Like Joseph said that they were going to do. We are helpers one to another. So go ahead and go out and help each other. People, we still have our 1995 special going on. Everybody on here should be signing up 5 a week. We should be enrolling 5 people a week with what we got going on, and there should be no EVPs at all. So I dedicated myself to helping you guys, but you got to make the move. This Pace ain't making that move. I called you. I'm saying it here. You make that move, I got your back. Jerome and myself have your back. But if you don't make that move, I'm going to go with the ones that's making the move now, because this is your business and you have to mind it. I thank you guys for listening and joining the Team Vision, myEcon Team Vision training. We'll be back on next week. If my guest confirms, we will have a guest next week because I want to do, interjecting with all of this money stuff, I want to talk about building business, okay? And we're going to do some have a guest on here that's going to talk about building business. Once I get the confirmation, I'll let you guys know. And then after that, we're going to go back to our PCP plan because we got to interchange all of this kind of stuff so that you guys can keep moving. And y'all better keep up with me because I'm fixing to go into the stock market. And we're gonna see how many of you are ready to buy at least one stock. Okay? We're going to talk about that and educate you on that, okay? All right, you guys. Good night and have a blessed evening.
Good night.
Good night.